Hello everybody and welcome to the live. I just don't have all the lights on. 1 second. Let's get a little bit more light in here. Here we go. All right, so welcome to the... There you go. There's a bit of a delay. So hope you are enjoying the new studio. Fitted it out this week. There's a few new things that I've got here to play with, so just bear with me today. But welcome to Tuesday night's market scan here for Insightful Wealth. And if you haven't joined our school community, please come over and join us there. We're a whole group of traders and investors and just Australian families that are really looking to thrive in life. The main goal for the Insightful community is to help people achieve economic security so they can enjoy time and location independence. So we are very, very heavily focused on teaching one of the skills to do that, which is trading. But there's a lot of just general traditional financial services pieces of advice in there as well. So like financial planning, how to pay off your home loan in sort of a quarter of the time that you currently have it, taxation advice, structuring advice, estate planning, a whole lot of different things. Sorry, the start time just caught me a bit unawares. I am going to put do not disturb on my phone so that I do not get interrupted. All right, we're away. Okay, so hopefully you're all online and you are hearing that and you're seeing everything. I've got the comments in the side there. All right, so where we go. So yeah, please come over and join us in our school community. It's over here. You come and join school, so school.com. Come and take a look at it. You then go and search for Insightful Wealth, and then you'll come and look at this school community here. Come in, join. There's a free trial. Come in, check it out, see what we're all about, and then hopefully you can enjoy all of the resources that we've made available for the community so that they can thrive, because that's the main goal from Ben, Nathan, and myself. All right, so having a look at that, let's get into what's been going on in the markets. And so over the last month, we've seen a tremendous amount of momentum flow into a couple of coins, those specifically being pumped up funds up nearly 100% from a month ago, Asta, MXY, which is a new trading platform, and then also M. So, and then IP as well is up over. So M's up like nearly 500%, MXY is up nearly 800%, and IP is up over 100%. So there is still a lot of opportunity out there to get into some crypto coins, which are going to exponentially change your wealth trajectory. And so that's what's been happening over the last month. If we have a look what's been happening over the last day or so, where we had a sharp and short sell-off on Sunday and Monday, so Australia, Sunday, Monday, which was Saturday night in the US, and then Monday morning, Saturday night in the US, and then Sunday in the US. I tend to find that we see a lot of these types of big selling days actually happening on the weekend in the US, unless there's news coming out during the week, which it's either FOMC, Trump's on Truth Social, or whatever may be happening in terms of global news. That's definitely having an impact on some of the crypto prices. But when we're seeing sort of big moves outside of those normal trading times or trending times, it usually is when the majority of the markets are closed. And so you've got the whales in there taking advantage of when your big trading and prop firms are not typically at their desks trading. So that's that. What's been going on with fear and greed? So fear and greed is we're still looking at Bitcoin near its all-time highs. And so when Bitcoin is sitting at or around its all-time highs, we want to ensure that this fear and greed stays down here in the black. We don't want to see this heading north into this maximum area where you can get up when it can come up here. So when we had all-time high prices previously, we had also the fear and greed chart actually telling us that we are overbought, and that price will probably correct, and we saw quite significant price corrections happening there. So what we've seen now is price now continuing to sort of test those new all-time highs, but we're not, that fear and greed indicator is not telling us that we are anywhere near overbought yet, which is fantastic. Another indicator that you want to be sort of watching is when we actually get oversold. And so if you have a look on the chart here, where you can see the market coming down here and it turning into that red, so that extreme fear period. So Warren Buffett said it best, be greedy when people are fearful, so buying down in these areas, and then be fearful when people are greedy, and then so selling up here. So you're buying low and selling high, which is really easy to say, but very, very tough to do. But it's something that I really focus the portfolios that I run on, and particularly with crypto. Yes, you can dollar cost average into a long-term buy and hold portfolio, but realistically, if you're looking at doing something like that, you really want to be sticking to the top 20 market cap coins, maybe the top 50. Anything under that, you really want to be looking at trading the momentum and the velocity of price movements and the volatility that's happening in this market. And so buying down here on the lows, and then potentially looking at taking some of those profits off when you're hitting into this like maximum fear level. And so over the weekend, when we had this huge sell-off in the market, it actually came, the fear and greed indicator moved from, it's pretty neutral, from greedy to a little bit neutral, to actually just touching in fearful. And then so that's also an indicator for you to be thinking, well, did we actually move into an area which is a good buying zone? And so we definitely, when we're looking at the portfolio on Monday, we definitely added to some of our long-term hold positions because we saw the big wicks, the big bounces happening in BTC, Ethereum, and Solana. And then so we looked down the value chain and looked at, well, what do we think has been oversold even more than those big main coins? And where can we potentially get the most velocity or the most percentage gains back when it recovers back to those all-time highs? And I'll go through a couple of those opportunities later today. And so I want to review what's happening with the M2 money supply as well. And what we can see here is we have a look at year-on-year growth of the actual money supply that's happening. So last week, the Fed did reduce interest rates as we thought they would. They did only reduce them by 25 bips, so 0.25%. And that really didn't move markets one way or another because everyone had already priced this in. So all the economic data that had been coming out over the previous 6 weeks has really given us an indication that, yes, look, we are expecting that the Fed will now reduce interest rates. And they came through and they did do that. If the Fed didn't reduce interest rates at that particular point, it would really be a concern, and that would have had quite a negative connotation for all of the markets and all of the definitely public markets, which just day after day are just hitting sort of new all-time highs. But Bitcoin has historically followed the M2 money supply, so we want to. And that makes sense because, well, if we have a lot of money printing or new money supply being created in the world, well, what is that new capital going to flow into? And predominantly, it doesn't flow into debt reduction. It predominantly flows into growth assets. And so those growth assets being S&P 500, NASDAQ 100 sort of companies here in Australia, ASX 200, your big miners, your big banks, and that's why you're seeing such massive growth in all of those publicly listed markets. But what's also quite interesting is it's been flowing into some commodities as well, so gold and silver and other various different things. And we'll look at a chart later on. But if we do start to see a significant amount of tightening in the future of this money supply, then that could be quite a negative forward-looking indicator for what we could perceive to be the future Bitcoin price. So having a look at some charts here. What I'll do is just coming up here. So when we have a look at the monthly chart on gold, it has just been an exponential growth. The chart is literally just straight up. And so when I build portfolios for my clients, what we really concentrate on doing is try and build as much diversification into the portfolio as we can. And so what that means for customers is that when different parts of your portfolio move, then the entire portfolio shouldn't go up altogether. You want to have assets which are what we call like uncorrelated. And so when we think about building a model portfolio for our clients, or when you're thinking about building a model portfolio for long-term wealth creation, what you want to have a look at is the different asset classes that are available. And so one of those core asset classes is publicly listed companies. Yeah. And so you put that as just one entire asset class. The other asset class that you probably want to be looking at is maybe direct property, and that can be broken down into Australian, international, how you access those through real estate investment trust or direct ownership here in Australia. And then you also want to look at potentially a basket of commodities. And then you also want to look at some alternatives like Bitcoin. And you also want to look at on the defensive side of the portfolio when you look at cash, if you want to just have it in a savings account, whether you want to have it in a cash management, term deposit, if you want to use bonds to hold your portfolio, or whether you want to go down or up the risk on the risk profile when you're still looking at that cash and defensive assets, and look at starting putting some of your money into like private credit. And so your risk tolerance is going to determine where you allocate certain amounts of capital. And then when you're thinking about investing cash on that defensive side of your portfolio in potentially a 60-40 sort of overall percentage split, if you're looking for sort of long-term growth and you're over the age of 50, then what you're sort of seeing is, well, if you've got cash in the bank, you're earning anywhere from sort of 1 to 3%, depending upon the bank that you're with. And then it goes all the way up to sort of 10 to 12 to 14%. And so if you're thinking about, well, I've actually got my defensive part of my portfolio invested in cash and I'm achieving 14% return, that's actually phenomenal. And so in this sort of medium interest rate environment, and so what I mean by medium is that interest rates are sort of sitting, in a median range over the long term, but it's probably what we would call like sort of a new normal of where interest rates will maintain themselves. But like if I was saying, well, on the high side, well, we could see interest rates, particularly here in Australia, of up and around sort of 8%. Now they're sort of sitting at around about high fives in terms of your home loan interest rate, and the cash rate is reflective of that. And so that if you can achieve a cash on cash return of sort of plus 10%, like that's a phenomenal return. So long as you're investing in a diversified portfolio of different managers, and they are definitely managing a risk, and you don't have, and your money can't get tied up if things go wrong. So you've got to do a lot of research into your managers. But when you're thinking about building that portfolio, you want to spread your risk over a whole lot of different investors so that you get a nice average return. And so what you might say is, well, of the 40% that I've got, you might want to hold 20 to 25% of your defensive portfolio in sort of cash and bonds, and then you might hold sort of 15% of the overall amount, and you might look at going up that risk curve in your defensive part of your portfolio to increase your returns. And you just got to be really, really well. My advice to you would be is to go and get some financial advice, someone who does this. So someone who invests for a living. And you don't have to pay all advisors big ongoing fees. You can just go and get some portfolio construction advice or some portfolio advice. An advisor should be able to come in and give you a really good idea as to how to initially structure your portfolio and then sort of manage that on an ongoing basis. Whether you need ongoing advice or not really comes down to the complexity of your life. I know for most of my clients, the complexities that we build into their lives so that they can achieve economic security and enjoy sort of that time and location independence, it comes with just growing a sum of money, which is where they start, to quite a large amount of money. And then so therefore they've got bigger problems. So when you don't have a lot of money, you've got one set of problems. Well, one of them is I don't know how I'm going to afford to live. But then as you grow that portfolio, your problems change. So your problems then become, well, how do I keep as much cash and capital that I can? And how do I mitigate the amount of taxes I need to pay? Who can I distribute income to on an annual basis within my family or within my structure? And then also, as I age, well, how does that capital then get passed on through intergenerational wealth transfer? And sort of at the moment, we are heading into a period of time where we are going to see the biggest intergenerational wealth transfer as the people born in the sort of 20s, 30s, and 40s move on, and baby boomers sell their businesses that they've built over the last 30, 40 years and then move that. So yeah, there's a lot of opportunity in the world at the moment if you're willing to go out there and get it. And if you're working a job and you don't really feel like you're getting ahead at all, then mate, come over to Finsightful, come and join our community of like-minded people, and then just work out how you can get an edge in your life. Most of us are trapped with our home loans, and the idea that we have is that we can assist you, or we can show you a strategy where you can pay off your home loan in under 25% of the time that you would normally have. So if you've got a 30-year term loan at the moment and you have extra equity and the ability to be able to borrow additional money, then we can reduce that 30-year term down to potentially under 10 years. Yeah. So that saves you hundreds of thousands of dollars and really propels you towards economic security, whatever that figure is for you. All right, so let's get back into the charts. Gold has just been absolutely tearing away, as has silver. And so these are on the monthly. Silver doesn't look quite as good as gold, but it still does look very, very bullish. Well, not oil. Let's just take that out. Let me do that. So oil is putting in lower lows and lower highs and lower lows and lower highs, and it continues to trend lower. What I would have expected is when the Fed reduces interest rates, all commodity prices should have gone up. But oil actually bucked that trend and continued to trend down. So there is definitely an oversupply of oil in the world, and this could potentially be due to the transition globally away from sort of fossil fuels and more towards greener energy. But I don't think there are enough electric cars on the road to really be justifying the price decrease in crude oil. And so it's been declining for quite some time, and it doesn't look like it's going to return at all. Won't look at any more of those. Having a look at the US dollar. So the US dollar, Trump's administration really is focused on reducing the value of the US dollar because they want to refinance some of that trillions of dollars worth of debt that they currently have outstanding to the world. The VIX is at a very, very comfortable position. Anything under sort of 18 and then sort of around this sort of 13, 14 basically means that the markets are asleep, that there is no volatility, there's very little risk in the markets at the moment, and that all is safe to be continuing to be investing. When you see these big spikes in volatility, that's typically a significant sell-off in the market. USDT, when you see USDT dominance sort of sitting below 5% and sort of above 5%, when that's within that band, that is what we would sort of say a neutral amount of crypto buying or USDT sitting on the sidelines. So when you think about the total crypto market, the majority of people are owning spot coins or assets, and then you have a few people who are trading, and then for you to be able to trade, you're either keeping your coins on the platform or as collateral, but you also need to have some USDT sitting there being used as collateral for you to be able to then buy and sell or pay your trading fees and so on and so forth, and fund your losses if you have any. But most successful traders have a 50 to 60% win rate, maybe even a little bit lower, but it all just comes down to not only their win rate, but it comes down to their return on investment on a per their R. So what is their risk per trade on there, or what are they aiming for? Is it a 3 to 1, 4 to 1, 5 to 1, and where they are? So looking globally here, this is what I was talking about before. The Dow Jones is absolutely on a tear. It broke again all-time highs on Monday night. It's still looking pretty bullish at the moment. S&P 500, same story. We're just seeing that markets absolutely just tearing away. This is very, very bullish. And so when you think about like this chart here, there are periods of volatility that we can look at. Yep. And so, there are periods of market sell off. But if over your lifetime, if you just look at dollar cost averaging into over this period of investment time frame, your capital grows. And so that's what you should be looking at when you're thinking about investing, particularly that most Australians or most people, predominantly what we're looking at doing is we are accumulating an amount of capital and we're utilizing that capital to enter into the property market. That property market is either through a principal place residence or we're looking at starting to build an investment property portfolio and we become rent investors. Or all of us are contributing into the superannuation scheme. And so if we're doing that, then every fortnight, every month, every quarter, your employer is paying into your superannuation for you. That is your money. It is part of your salary. And so 11% is being paid in, and then that money is then being dollar cost averaged into the portfolio of your choosing. So make sure that you have an understanding of what that is. If you're on the younger side, then you could potentially be thinking about having a more aggressive approach to investing in superannuation. If you're a bit older and you don't have the time to recover from volatile things in the market, then you probably want to think about investing with a little bit more safety and security. The NASDAQ has been performing exceptionally. So we just get rid of that. 1 second. All right, so NASDAQ has been performing exceptionally. Again, all-time highs here for the NASDAQ, and it's just tearing away. Predominantly, this all growth has been all of this growth has been driven by your Magnificent Seven, and all technology is just going leaps and bounds above and beyond all other industries at the moment. The benefit that I really like about investing in the NASDAQ 100 is you're currently getting all of today's tech. And then any of the new big enterprises that are coming into tech will join this particular index. But also, as these smaller type companies actually invent something or create a new technology, it's typically your Mag 7 or one of their competitors who is going to buy those companies. So then they get merged into the NASDAQ 100 over time anyway. So I just think that when you want to have a thematic as part of your investment portfolio, you really want to be thinking about, what do I see outperforming everything else over the next 1, 5, and 10 years? And in my personal view, which is not financial advice for you, but technology is going to be the predominant driver of all growth across the globe going forward. So it's going to be really interesting to see that. The Russell 2000 is the US small cap. Now, to see that this has actually bounced back and recovered back to where it was in sort of November 2004 is great. This sort of tells me that the American economy is actually now really starting to recover, and not only are your big multinational corporations that are sitting on the S&P 500 and your Mag 7 technology companies are making all the money, but actually now these sort of lower cap American companies that potentially still make money all over the globe, but are just much smaller than your S&P 500 by market capitalization, are starting to actually generate more revenue, and investors are now starting to look at down the value chain and sort of saying, oh, okay, yes, we can have these high growth companies in our portfolio, but we're now also looking for companies that are actually going to that are small cap value, and then also can produce profitability, and then that will then generate momentum. And so as you can see here, we've seen quite an aggressive price appreciation from about March this year until now. And so what we want to see with this Russell here is we want to see it bust out of this particular area that it's been trading into and continue to go higher. So it's going to be interesting to watch that. All right, so what's been happening in Bitcoin? What's been happening in crypto? Am I going for time? About 25 minutes. Okay, great. So when I was saying before about dollar cost averaging into a investment, when you think about long-term wealth creation, when you have a look at this Bitcoin chart here, who wouldn't have loved to have been buying Bitcoin back here in 2014 when it was $90? What a chart! What a growth of value that we've seen over a period of time. There's just nothing. There is no asset. Available on the world that could have done this for your portfolio. So let's just see if we can, if it's going to continue. So when I look at BTC, one of the trading styles that I really like is just having a look at, well, what's happening on the higher time frame, and then I look for a lower time frame entries. And so over the weekend, when I saw this big sell-off over the market, I was sort of like, well, what was the reasoning behind that? There wasn't really any reason for the sell-off, more than just whales coming in and really moving the market. And so it created these big value gaps, which actually filled these value gaps from a couple of weeks prior, and then it's also filling over here. So this has been filled out now. But interestingly, I looked at that and I was like, oh, okay, so where was my sort of Monday high? And so I was saying, looking at what happened over Sunday, where are we at in terms of our highs and lows for Monday? And I was looking for some entries overnight. And I was like, okay, well, if we have price continue to test or wick down into this area where we saw quite a lot of buyers come in, well, what's that going to look like? And I said, what I should probably be targeting is my Monday daily high, because that Monday daily high, it also lines up with this particular area here, which we've seen like quite a lot of price action. So it was a lot of support here. So I would suggest that that's potentially going to be a bit of resistance going forward. And so I said, well, if I can sort of map out a trade from there, we'll see how we go. And so that's what I did here on BTC. And so we got into something which looked a little bit like this. So I came down here, I looked at the 1 hour, and we got in here. And so we wicked down, we retested, we came down here and retested here. I didn't think that the price was going to go lower. And then I had my stop sort of lined up over here. So we could see this come out here, but I think there's a higher chance that this trade is going to retest this Monday day high before it retests this low. So we'll see how this goes this week, and I'll track that on sort of a short little video every week and just give you an update on how we're going on that. But we'll sit there. Depending on how price reacts over the next couple of days, this trade could go on for a week or so. And this is looked at a higher time frame sort of entry on a swing low, with a view that we want to sweep that Monday daily high. I really do, excuse me, strongly believe that these fair value gaps in through here will be filled. And then if they do, it's still quite a profitable trade from here to in here somewhere. So I'll be maybe looking at taking off some profits through that area, but I'll just see what's happening in the overall market as we go. Another really interesting one is SUI. So having a look at this, is we sort of have this descending triangle. Let's look at the daily. That's made a mess of everything. So here we go. We've got this bit of a descending triangle happening here. We've also seen price sort of continuing to bounce off this sort of $3.40, $3.20 sort of area, and then buyers continue to come in, and it's bouncing back. And then it's coming off this sort of downward. So we're continuing to make sort of lower highs. And so what I'm going to be looking for in this particular trade is I'm going to look for an entry into this, where we can potentially look at getting a long somewhere in here if price comes back down here, putting my stop down there, and then targeting this over a long term at that all-time high. And so that's a 6-to-1 trade. And so this will be long term. So I'll be looking for this. So an entry that hopefully price comes back down in here towards the mid range of this particular area, and then having quite a tight stop in there, because if it breaks lower than here, there's really nothing else. There's really not much support until we get down to there. So I can't see it coming, I can see it definitely, if it breaks to the low side here, definitely coming down and testing sort of this area. So yeah, we don't want to have a stop loss sitting like that. That trade doesn't look that pretty at all. So we want to have it sitting underneath this area here. And so I'll do a bit more work on this, but this is what I'm sort of thinking on SUI for now. Thank you everybody for watching. Again, if you like this, please share YouTube. Please share, like, subscribe. If you've got any commentary, if you like the new studio, please let me know. Nathan will be really interested to hear your feedback. Please come over and join us in school. There's a free trial. Anyone who joins for a 12-month period also gets access to a Success in Life review, which is me sitting down and looking at your financial situation and looking at your goals and coming back to you with a bit of a snapshot and some very, very high level guidance around how you can achieve those goals. And some of those things could just be outlining the rough strategy and how quickly we can pay off your home loan so that you can be debt-free as quickly as possible, or at least home loan debt-free. But also reviewing your portfolio and making sure that it aligns with your asset allocation, and even just potentially just talking you through what your current asset allocation is and where it potentially should be. Thank you, everyone. I hope you're having a wonderful Tuesday night. Have an excellent week. Trade safely, follow your trading plan, and I hope you all achieve success in life. Good night.